To discuss this, we're joined by Muktar Mohammed, CEO, Asheer Investment Ltd. Thank you for joining us.
Thank you. Good evening.
Given the continued rise in inflation despite repeated interest rate hikes, what alternative monetary policy measures could the CBN consider alongside interest rate adjustments?
Well, it has not worked. So alternatively, I think the CBN should still be looking at stabilizing the exchange rate. Basically, that's what has been driving inflation. So if you ask me what alternative decision they should have taken, is to see how they can get liquidity into the FX market, stabilize that rate, and get foreign investors to want to play in that market. Like the CBN governor said, you clear your backlog and yet you have volatility, no investor want to come. So if you ask me what other thing they should be doing was to see how they can attract more FX into that space. And if they do that, definitely that will slow down the inflation that we are seeing. I've said it over and over, hiking of rate has not done us any good. Like your report said, from 17 to 33, that's almost 100% increment for the past 7 years. 7 months. And it has been going on like that. And other nations that we actually did the same process of hiking rate together already doing inflation very, very low. And why is ours not working? It's because we are not looking at the particularity of what major challenges is driving inflation. And what is driving inflation as it stands now is the FX. And why is FX driving inflation? Because over 80% of what we consume, especially when it comes to cereal and others, we basically import them into Nigeria. So until we address that volatility, we are just dancing around the bush without addressing the real issue.
Talk to us about this asymmetric corridor. How effective has this been in maintaining liquidity in the Nigerian banking system? And are there any adjustments that could be made to further its effectiveness?
Well, I think that space is fine. If you look at liquidity, the banking space, you've not been seeing the kind of borrowing we used to see bank borrow from CBN. And we've always said that banks are liquid. And I think it will just be left at that because it's not really having a negative impact on the bank, or rather it's even having a positive impact on the bank. And it has also been able to help the bank to want to lend money to the real sector. So I think when you look at that, I think it's okay. I don't see anything wrong with that.
With inflation significantly impacting Nigerians, what are the potential short-term economic consequences of raising the interest rate to 26.25%, particularly for businesses and consumers?
Well, for businesses, cost of funding has gone up. So if you borrowed last month, that means now you're paying more for it because it has been hiked by 150 basic points. For consumers, that means the producer will turn some of those costs over to you. So what it means is that we'll still see goods and services still very, very high. We might even see some companies trying to do layoff to balance up, especially when they are looking at their overhead costs and begin to look at where can we reduce our overhead costs. And normally companies, when they are looking for ways to reduce their overhead costs, they always look at their manpower. So that will be the three major effects on our economy.
Looking beyond monetary policy, are there any fiscal policy measures the Nigerian government could implement to complement CBN's efforts in tackling inflation?
I tell you, Felicity, why we've not seen those efficiency in what the CBN is doing, because the CBN seems to be the only one at work. The monetary policy seems to be doing something different. Now, why do I say so? You see, like I said, we import virtually about 80% of what we consume. And yet the continuous hike in import duties, it has moved because of the exchange rate to about 1,500. And even some of the things we do produce from this country, we have to import them outside in terms of machinery and other things. And here we have to pay that. So what are those things that I think the physical side will do? They should take a bite of their revenue, especially make it stable, keep the interest rate. You know the true value of the naira, as the CBN governor keeps saying that the naira is undervalued. What's the real value of the naira? Then fix your import based on the real value of the naira, rather than saying, okay, market forces will determine it, and we have seen it move to 1,500. that is not helping the Nigerian economy. That is fueling a lot of inflation, because the cost of goods will naturally go up. So government should be, the fiscal side should be ready to take a bite of their revenue to complement what the monetary side is doing. That will drive down inflation. This is what happened in Kenya some almost at the same time that we're hiking rate. Kenya look at the precarity of their situation and decide to cut off tariff of household items that are majorly used by the Kenyan citizen. And that have driven down inflation at that time from a high of about 20%, which was higher, which was higher than what Nigeria has. But today, Kenya inflation figure is hovering around 11.5% and 12%, just by government taking a bite of their revenue in terms of tariff of goods and services that are needed in most majority of them. So I think Nigerians should borrow a leaf from them and begin to see how the physical side will do some tightening or take some bite of their revenue, especially through the ports.
Muktar, it's always a pleasure to have you on the news. Thank you for your time.
My pleasure.